biggest corporate scandal in South Africa. And sign-on shares would crash. I thought it
Welcome everyone. Hello, hello. Good afternoon. Good evening. Salwanani, Punjani. Hello, hello. How are we all today? Okay, so based on what you guys can see so far, we can see that this lesson is going to be around entries. How to find the right entries, how to know when to enter, how to know when to exit, how to know how the importance fundamentally affect your entries. Okay, and in this session, what I personally use is the trend line and support and resistance. Okay, and you'll understand that if your support and your trend line is off, obviously your entries will be off. So that means if your support is too low or too high, it means you're going to enter too early, and therefore you're going to go into drawdown. It's going to hit your stop loss and then go in the opposite direction. Okay, so this session we're going to go over what we would like to call sniper entries or good entries where there is a minimal drawdown or zero drawdown. Okay, now these are the basics. I will go into a lot more detail with you guys. So this session will be a bit different to the others. I want to take almost like when I'm explaining something, I'm going to ask you guys before I give you the answer. Okay, I want to interact with you guys a bit more. I want to see that you guys, have this knowledge with you as well. Okay, so before, I'm not just going to give you everything. I will explain everything after, but I just want to see that everybody is going along nicely. Okay, is there any questions before we start? Nope. Okay. All right, so how we're going to spot entries, we need to use them firstly by using our trends. So if we have a bullish trend or a bearish trend, sorry, this will determine our overall direction, whether it's a buy or a sell. So obviously, if you've got a bullish trend, you've got a buy in your favor. If you've got a bearish trend, you've got sells in your favor. As you can see, a bullish trend equals buys, bearish trend equals sells. What I want you guys to think of as a trend, I want you to think of a trend as a river. If you're swimming in a river that's flowing in one direction and you try to swim against it, you're only going to win for the first 2 or 3 minutes, and then you're going to get tired, and then the river is going to push you down. So same thing with the market. You can enter a buy, but eventually you're gonna be in profit, but eventually it's gonna consume you and you're gonna be in losses. Okay, so this is where scalping comes in, right? So you can buy on a downward trend, but it's very risky because again, you've got no favor odds in your favor. And same with buys. So you can buy high, sell low, but at the same time, your sell you'll hold for a lot shorter than your buy, right? So this is a classic bullish trend. You've got a high, you've got a lower high, a higher high, a lower high. And a lot of you guys seem to miss this part in terms of a bullish trend. Is sometimes you'll see that you've entered a buy and you'll get this part where it comes down slightly and you'll think it's a reversal and you'll end up closing your trade. Okay, but in terms of market structure, it's probably the most important one. And if there is market structure, that is another reason to hold your trade. Okay, so you must always remember bullish trend, higher highs, higher lows, bearish trend, lower lows, and higher lows. Okay, these higher lows are not reversals. If they are conforming to a trend, it is literally just keeping with structure. Okay. Can the guy just mute his mic, please? Yep. Okay, but this is what I want you guys to remember from us. This is very, very basic in terms of a bullish trend and a bearish trend. You want to look for higher highs and higher lows. Okay, and these higher highs and higher lows are entry points. So if you're in a bullish trend, the higher low is an entry, a higher low is an entry, a higher low is an entry. Okay, same opposite with the bearish trend. Bearing, your entries are the highs of the low. Okay, so you got a higher high, a lower low, a higher low. This is an entry. Okay, and I want you guys to remember that it's not necessarily always about looking for support and resistance. You just have to keep with market structure. Okay, then we look at how to spot our entries. So we're using our trends. Now we combine our trends with our support and resistance, and then also price action patterns. Okay, it's very, very important that all of these are combined. Okay, and this is crucial to finding the right entry points. Okay, so just like support and resistance, it is the same thing with the trends. You've got a supporting trend line and you've got a resisting trend line. Obviously, you buy at support and you sell at resistance. And it's the same thing with finding really good entries. right? So this here is a basic example of support and resistance. So we've got support, we have resistance that turns support, and we have resistance that turns support again, okay? There is multiple places to enter this, but it's just about finding the right place, okay? Sometimes you can enter too early and you're going to draw down and hit your stop loss and then goes against you, okay? So from what I've picking up from you guys is you guys are either entering too early and your stop loss is not big enough to compensate for the market structure drawdown, and then eventually it goes with you, or you're entering too late that the market is then changing direction, okay? Or you're entering, but you enter on the high, but the market is just making a higher low and you close your trade because you think there's a reversal. Okay, so it's just about you have to remember market structure. Okay, market structure is key. If you don't have market structure, you're gonna have an empty puzzle piece. You're gonna have one piece missing. So all of these are a puzzle. Okay, and you need all of these pieces to get it right. And unfortunately, a lot of people they ignore one or two of these aspects, and that's how they get it wrong. Okay, that's how they battle to find entries. That's how they battle with entering too early and the market takes them out and then goes in the direction. So it's very, 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 very important to remember this. Okay, so then support and resistance. We need a confirmed level of support and resistance to get entries. Okay, I won't just, this is not just a presentation. I'll be going into the charts as well. And I'll do a practical example of everything that I speak about. Okay, so we have a confirmed level of support and resistance. By confirmed, I mean it has multiple touches, which gives us multiple confluences, right? If an area has rejected, if price has rejected an area 2 or 3 times, when it approaches for the 4th time, we should anticipate that it is going to respect it and continue back down. Only once we see a break do we know that we are going for buys. Okay, and it's very important not to preempt the market saying, oh yeah, it's going to break this time, it's going to break, and then you go for buys and it ends up going against you. So we have to have a confirmed level. It has to be confirmed with multiple touches in the past. Okay, and this is sort of where a lot of people struggle is because they can read the left of the chart, but when it comes to figuring out what's happening, this is where a lot of people struggle. They can read the left very well, but they cannot read the right. Right. So where the market has printed already, everyone can identify structure. They can identify this, they can identify that, but you have to identify it live. Okay, and that's the hardest piece, which I'll also explain in the same time. We then need to anticipate how strong these levels are based on previous price history. So again, very, very important. We have to see how long this area has been respected by price, whether if for me it's on a daily or a 4-hour. The higher the time frame, the stronger the support. Okay, if you guys have a pen and paper, now is your time. The higher the time frame, the stronger the support or the resistance. Okay, so this will give us an opportunity to buy or sell. Already, just by using support and resistance, we should already have an idea of where to buy because it's quite obvious. You buy at support and you sell at resistance. Okay, this applies for both NASDAQ and for currencies. Okay, it's very important to identify support and resistance, which is the same thing as demand and supply. Okay, we enter buys at support and we enter sells at resistance. This is very, very basic stuff is what you should be looking to look at, right? But you don't just enter on a sell, you look for a rejection. Okay, now this is where the question comes to you guys. For you personally, what rejections do you guys know? Okay, I'll give you guys a couple of minutes just to answer. So the question is, what types of rejection do you know?
Hello.
Hello?
Hello.
Hello?
To answer the question that you don't you've just asked right now, mostly my rejections, I look for weak rejections mostly.
Okay,
like
so
when
yeah.
Yeah.
What are you gonna say?
I look for weak rejections. So when a market goes lower to a certain price or point and then pulls back and then closes with a huge wick to the opposite direction, then I use that as confirmation to show me as the market is rejecting to go that direction and is instead trying to push the opposite to the opposite side.
Okay, so that is a good example. Does anybody else? So that is an example that I use personally as well. I will be explaining that in the next one. But is there any other forms of rejection that anyone uses? That's a really good answer. Well done. You guys can either type it or talk. It's up to you. Come on, guys. You guys must know. Pin bar candlestick and engulfing candlestick. Very good. So engulfing for me is my favorite because an engulfing means that it is stronger than the opposite direction. So if you have a bullish engulfing, it means it is stronger than the sellers. Same with the bearish. Multiple weak rejections. There we go. So I'm not sure who answered the first time there, but you need to be careful in terms of you could have a wick, right, and it closes below, then fine. So that's really good, guys. Multiple wick rejections, yes. So these are some of the things we have to look at, and this is how we define sniper entries, is by entering on these wicks. Okay, so now these wicks, for me, I look for these wicks on the 4 hour or the 1 hour, because obviously on the 4 hour, if you zoom in, that 4 hour candle is composed of multiple 1 hour candles. So those 1 hour candles will give me the rejection that I'm looking for, the 3 crows, a bullish engulfing, you know, a hammer, a shooting star, a gravestone, a doji, etc. And then that will give us our good entry is by entering on a 1 hour, by identifying our rejection. So like any other examples we just spoke about, and then on the 4 hour is where we have our wick. Okay, that's really good, guys. So here we go. This is a good example of a rejection candles, right? So the first example that we got was multiple wick rejection and a pin bar candlestick or an engulfing candlestick. So this right here is a pin bar. For those of you who don't know, this is a pin bar, right? And it's a pin bar confirming our resistance level. So you can obviously see with the other candles as well that there was a level here, right? And this level has then come into a downward trend. And you can see price is respecting the trend line like it is resistance or support. So in this case, it is a bearish trend. So it's acting like this is resistance, right? And this is on a daily time frame. So you must see that these wicks compose of multiple candles on a lower time frame, right? So this is where you get really good entries, is by you look for a trend on a 4 hour or daily, right? And you look for price to respect that area in terms of a bullish engulfing, a bearish engulfing, pin bars, dojis, sledgehammers, shooting stars, gravestones. The list goes on, right? So you need to find something that works for you and that you can easily identify. So you can see here, then we got bearish rejection candle. So this is what Juan said is wicks, right? So here we have multiple wicks in this direction here, right? So this will then confirm that this is then a resistance as well, and then same with this. So this is where you would get your entry points, is by waiting for price to reach a support or a resistance, right? There's no point in buying or selling in the middle, because when you're buying or selling in the middle, there's no real direction, right? The market could then close bearish, like you can see here, right? So you wait for the confirmations. I promise you, if you learn how to wait, your trading will change. Okay. And it's just about patience. It's just about, instead of forcing a trade, wait for the trade to come to you in terms of, I'll buy at support, I'll sell at resistance, I'll buy on a break, I'll buy on a sell, or it's just, those are the kind of things you guys have to remember, is when you guys are not trading, it doesn't mean you are losing money. It means you're protecting your capital. And at the end of the day, you only want to take something that is very, very, very high probability. Because at the end of it, it's a 50-50 chance. You might as well flip a coin and say it's a buy, it's a sell. But this is where using market structure, using support and resistance, using trend lines, gives you that advantage over the market, right? And the same thing with resistance and support. So this was our resisting trend line, and this was our supporting trend line. So now this is horizontal support, right? And horizontal resistance. So the same thing, price approached resistance. Let's go. Just give me 2 seconds, guys. There we go. Okay, so back to the presentation. So the support and the resistance. So at the resistance here, we can see we have a bearish engulfing. Okay, and on a lower time frame, this will also be rejection candles. So if, for example, if this was on a 4 hour, you would have a 4 hour engulfing, but on a 1 hour, you would have multiple wick rejections. You would have a, 3 crows or the 3 arrows, which would give you your confirmation on a lower time frame. And then on a 4 hour is how you have your wicks, right? And then at the same time, at the bottom, a major support, you've got your wicks. So again, a pin bar, right? And you've got 3 bullish candles in a row. This is another confirmation, is having 3 bullish or 3 bearish candles. Okay, so again, I'll go through on a chart with you guys as well, and then I'll take any questions. Okay, so this is taken directly from the NASDAQ and currency course in terms of mastery of entries, lesson 1. I'll be doing more and more as we go on. So trends and zones. So just exactly like I said, we need to use trends and zones. So these zones are areas of support and resistance, and these trends are either bullish or bearish. Okay, so in order to make good market conditions, outline 3 types of trends. So you've got an uptrend, a downtrend, and a sideways trend. So it's either consolidation, bearish, or bullish. Okay, and this was all covered in technical lesson part 1. Okay, and it's important to have the basics right before you guys try complicate everything further. Okay, and it's about, again, you can't fly unless you can run. You can't run unless you can walk. So it's the same thing. You need to get the basics right before you try do things that are outside of your comfort level, or things that are a bit more advanced. Okay, in order to find good entries, it's best to trade with the trend. So exactly like I explained, if you're in a river, you're going to swim upstream for 2 seconds, you're going to get tired, and then you're going to end up going down the stream. To effectively use trends for entries, you must learn how to integrate these zones. So these trends of significant levels. So exactly like I said, it's a puzzle piece. You got to integrate all of these support, resistance, trend lines, and rejections, right? And these zones, all of this together will give you your correct entries. Okay. In order to find significant levels, we are going to use the FX code high and low strategy. So again, this was all taught to you guys in the beginning, but it's just
Hello.
about, hello, I'm busy. 2 seconds. Yeah.
Sorry for interrupting you, but I wanted to ask, like, is it possible for me to show you my chart here?
Not at the moment. No, I'm just going to do a purely a lesson. Yeah, at the end, you can stay back and I'll look at your chart.
Okay, thank you.
No worries. Okay, so like I was saying, guys, we need to use the FX code high and low strategy. So again, this was all taught to you guys. And this is where it comes with, you have to use the basics first before you can sort of move on. So once you nail the basics, you'll see everything else will fall into place. Okay, and the basics, I mean, is trends, support, and resistance. Those are the 2 most basic foundation skills we need to have, right? So then we need to use the FX code zone strategy. You need to learn how to differentiate and tell the difference between buy and sell zones. So like the buy and sell zones is, you buy at support, you sell at resistance. Okay. The key points, the end breakup of a trending support is the beginning of a new resistance, and vice versa. So what this means is a support can become a resistance, and a resistance can become a support, right? So if price is above, it is support. If price is below, it is a resistance. And the most important thing, guys, is you have to keep it simple. And when you try and go too advanced, or you try and do funny things, or you try and complicate things for yourself, that's when it gets difficult. I promise you, trading is a lot easier. I always live by one rule as KISS: keep it simple, stupid. Right? You got to keep it really, really, really simple. You got to keep it to the point where you understand it. The minute you try to complicate it, or try to do something that's out of the ordinary, that's when it starts to fail. Okay, and it's always important to keep it simple. Okay, so this is another thing. People, they don't know when to enter. They don't know, why they keep getting taken up, but then the market goes in the direction, etc. So this is some key points that make finding entries very difficult. So firstly, we have manipulations and different market conditions. So one week you could have a ranging market, or next week you could have a consolidating market, and then the following week you can have a trending market, right? So trending It means it's following trends nicely. The consolidating means there's no real direction of movement. And these are some of the things we need to look out for. So we need to also beware of fake outs, trap zones, stop loss hunts, and volatile market conditions. So this just basically means is when, if you have a perfect setup and it's respecting structure, and let's say you enter a buy and a couple of minutes later news hits that is negative for the pair you're trading, that structure becomes irrelevant because there is news. Okay, and this is where the same thing comes with when you enter a trade, you just got to have to make sure that there is no big news coming, that there's no, anything like that that will affect your trade. Because at the end of the day, we are market traders and market structure traders. We are not fundamental traders. Okay, but the fundamentals affect our trades. So it's important to be aware of anything. So for example, if you're trading on the first Friday of a month on NFP, you enter a buy on gold, NFP hits, it's a sell. You hit your stop loss, right? It's the same thing. You have to look forward as to what's coming. Okay, then a choppy market refers to market condition where price is swinging up and down either in short term or long term. So this is where this week on Wednesday and Thursday, there was a lot of spikes randomly. I got taken out by some hit my take profit, but there were spikes that were uncalled for. There was no reason for it. People messaged me saying, "But my setup failed. What was the reason?" And it's purely a choppy market, right? This is when it's really difficult to trade in terms of your stop loss can be in the right place, but it'll take you out and then continue. So this is one of the hardest conditions to trade is a choppy market. Then you get a trending market. So like I said before, this refers to a market that respects normal market setups and trend setups. So like I said, you can have the most perfectly fine structural setup for a buy or a sell, and as soon as news hits, that all disappears, and obviously the news affects all market types, right? Now we need to learn how to avoid losing because of manipulation in different market conditions, right? So you need to understand, as for example, FX Goat, the Emmanuel and Zapello, they don't trade Mondays and Fridays because they want to let the movement from the weekend when the market was closed finished, right? And once this is finished, you'll see market will respect structure again. This is when there is less, I want to say, non-predictable volatility. So like there's random spikes, there's random, reversals that come in and stuff like that. Then you got choppy markets. So we've already defined this. So now when you have a choppy market, you got to understand when to trade the choppy market or when to sit out, right? And by sitting out, you're not losing anything and you're not gaining anything. But importantly, you are not losing money that you have earned and you're not going to be end up depositing again, right? So you need to just sit on your hands. So I always say trading is 80% waiting, 10% buying, 10% selling. Okay, like it says, don't trade. There's no need to force a trade if you don't have a good chance of winning, right? It's like if you think you have your hard-earned money, you're not gonna bet on Bafana beating Real Madrid, right? Just because they come from South Africa. Okay, and this is where the thing comes in: is you have to understand when is the right opportunity and when is the wrong opportunity. Okay, and by doing this, you'll see that you'll have a lot more patience with your trades in the first place, and in the second place, you're not going to be losing as often. Okay, and if you can't fight the urge of trading, play on a demo account. Me personally, when I get frustrated, I go play on a demo account and I literally just trade. Okay, if it's a choppy week, I'll go on a demo account and I'll trade as normal. Okay, and this will help me fight the urge of trading, fight the urge of missing out on something, because for me, I'm still catching it, right? And for me, it's just confirming and boosting my confidence. So next time we're in a choppy week, I have the confidence to actually go trade it. Okay, there's nothing wrong with not trading, I promise you. Right, so now we are going to move to the practical side of things where I explain what I mean by everything I've just spoken about. Okay, and this is vital that you guys go and back test this and you find this that works for you. So for this example, I'm going to use gold because gold is very, very good for following market structure and in terms of following support and resistance. Okay, so what I'm going to do is I'm going to clear the charts, right? And we're going to analyze together and very slowly. Okay, so if we go to the daily, we can see right now we are bullish, right? We are very, very bullish. But in the long term, this might be a downward trend, right? So if we do a downward trend, and this is the thing, you can just draw a trend, it doesn't have to be perfect, but don't force them on the market, right? So don't force them to conform to how you want it to be. Let the market show you what it wants to show you. Okay, so we sort of got an expanding channel here. I would say there's a level here. So again, I'm going back on previous price history. So you can see, yeah, we got a weak rejection, and then we got price bouncing on the support level. Okay, so yeah, we have a nice support. Okay, so don't worry about the trend lines for now. Trend lines is not the most important thing, but now I'm spotting my zones. Okay, and within this, there is zones within zones. Obviously, if you go to a lower time frame, you're going to see different zones, right? And then I would say we have a less significant zone here. I would say we have a level up top, but we haven't quite reached yet, right? And then obviously we've got heavy resistance where price made an all-time high. Okay, and what you can do to help yourself is you can label these areas of support and resistance by their time frame. So if you want to know that this is a daily support or daily resistance, mark it a daily resistance. So when you dive deeper, you know what you're looking at, right? So I'll put a daily resistance over here. I'll put a daily support down here. Right, so we've got our levels over here. Just quickly, and we've got our daily resistance, right? So now that we have our levels, right now we can sort of dive a little bit deeper in terms of we know where price is respecting on a daily time frame, and we know where it's respecting in terms of resistance as well. So now if we go to a 4-hour, we can see, yeah, so you can see that this support lines up with our supporting trend line, but maybe if we switch, we can maybe see a different way to conform it here. Yeah, so this is how I would have my trend line. Again, guys, remember this trick of switching to a line graph. It's very, very powerful. It helps clear things up for you guys. It helps you guys see where price actually was. And again, you can see we've got resistance here. So if we're expecting price to come back again, we're expecting sells, right? So if we have our trend, now we can spot our trends in trends here. So again, we're very bullish. So we find our swing low, and then we find our trend and we put it to conform with the trend. Again, we are not forcing anything. I'm literally just putting at what I see. I'm not trying to do anything fancy. I'm just sticking to the basics. Okay, so there we got our trend. And again, we can double this if we want to. And there we go. So now we've got our nice trend channel over there. And now this is when we can take the time to spot our less significant levels, right? So we've got our daily. So now we can either stick to the 4-hour or we can go down to the 1-hour. And this will find other levels where price has found difficulty breaking through. Okay, so for me, I would have a less significant level over here. I'll just do that one. Just a different color. And then maybe we got something over there. Okay, and it's just about, you just have to play around with these levels. You can see price was respecting here, price was respecting here. So there's obviously an area of support and resistance over there. So again, we're in a bullish trend. Right, so this is where we come down to looking at market structure. So immediately I can see a head and shoulders over here. And this was one of the reasons for a buy I did during the week. I think it was Tuesday or Wednesday. Right, and it's just about finding these levels. So yeah, I would say we have a level over here. So you can see prices come through this level, and it's retested this level. So there's a 1, 2, and a third touch. So as I was saying, just to clear up for you guys, so you can see on my chart over here, this is a 1-hour. if I go to a 4-hour, this is purely a wick, right? So you can see we have a pin bar wick here. And if you go to a 1 hour, we can sort of see that that is composed of different candles, right? And this is also just a head and shoulders. So you trade it on the break of the neck. So a neckline would be there. So you'd enter a buy on the break of this. Okay, and then once you have these levels, this is where you can wait for price to come to you. So right, if we're waiting for price to come to this level over here, we wait for it to come here. We either enter pending orders or we wait for price to get there. Okay, and this level just happens to be maybe an area of interest here. So if we had to go back to a 4-hour, yeah, we can see we've got nice wick rejections coming back down to this area, retesting and then going opposite direction. But we also have this trend line at the top, which is respecting. Okay, so ultimately in my head, yeah, I'll be looking for sells, but I won't be looking for sells at support because you buy at support. So this is where the scalping comes into it. Again, this is a 1 hour. You can see we've got our levels. See if we can expand this out. Yeah. Yeah, so this I would say was a resistance. A little bit of consolidating, breaking through, convincingly breaking through, retesting, and then continuing. So yeah, at this present moment, you would be looking for buys, right? Because everything is in your favor for buys. You're at a supporting trend line, you're at a supporting horizontal zone, and you are in a bullish trend on a 4-hour. Okay, so again, the higher the time frame, the stronger. So this is very, very bullish. So ultimately, you should be looking for buys. So you wait for price to come to an area where you want to enter, right? There's no point in entering a buy at a level over here, right? And then your stop loss gets taken out before it goes in your direction, right? So ultimately, if you were to enter here, firstly, your risk to reward is now doo-doo. It is useless, right? Because you're risking more than what you're going to make, right? So that's another indication of how you can know when to enter, is by what your potential movement to the upside or to the downside is. So in this example, if we had to wait for price to come to this level, we could wait for price to bounce off the support or the supporting trend line. Okay, and this would give us the best entry to maximize profits. We're only aiming for the previous high, and our stop loss is just below structure. Okay, so this would be a good place to keep it. So you can see this wick here just below, and then also a little bit below structure, and you can see our risk to reward is 1 to 5. So that means you are risking $1 to make 5. And if you multiply that with your lot size, is what you can sort of look to expect, right? And because it's Friday, the market is moving very slow. So you can see that this candle is moving very, very slow. But again, we already have some rejection candles. Okay, so if we see another bullish engulfing, we would enter a buy based on the bullish engulfing. We're in a bullish trend. We are at support. We've got a supporting trend line. Okay, so you can see just by using zones, I am now ultimately waiting for price to get to a place where I would enter. I'm not entering too early. You know, you could enter too early where the market could literally just play around a bit. You could have nice rejection wicks, but then the market could still play around a bit because it's Friday and then ultimately go in your direction, right? And at the same time, because your stop loss is so tight, right? This would ultimately mean that if you had to get taken out, right, you would eventually start looking for sells on the retest. Okay, so this is just about waiting to see what's going to happen. So if we don't get rejection here, if we don't get a candle that closes bullish or anything like that, then we don't enter. But at the same time, we wait for what we want to see. We don't trade on what we think. Okay, it's very, very important to always remember that we are probability traders. Nothing is guaranteed, nothing is set, but we use what we can see previously in our favor. Okay, so I just want to go through and explain some things for you guys as well. So I wanted to just explain a choppy market for you guys. Some of you guys might not know this, but it's when the market does not conform to any trends. It doesn't conform to any support and resistance. It literally just does what it wants, right? So if in this example, so a choppy week, you would literally have price, you know, just doing what it wants. There's no indication of where these levels are, but in previous times it respected this level. So this is where it becomes very hard to trade. Okay, in terms of it doesn't respect structure, it's not following your plan. Again, if something doesn't follow your plan, sit out. Wait for the market to be in the condition you want it to be in. Okay, so this is where I'm going to take 10 minutes to answer any questions. So this is your time. If you have any questions or you want me to explain something again, please ask. I don't mind answering question, even if it's 50 times. I will help you guys. Yeah, you guys can either type it or unmute yourselves and speak. Where is NAS going now? Okay, so I wanted to focus on entries, but I'll look at NASDAQ for you. Yeah, so for me, we've broken above. So you can see my levels that I've identified. Again, I'm not just teaching you guys something I don't use. You can see I've got my levels, I've got my trend, right? And for me, we might continue bullish. We might just retest the structure again. So we look for something like this and then continue, or we're going to come back down to our trend line. So again, we wait to see what's going to happen. Okay, can you please cover exit point? Okay, then I'll do that. What time frame is advisable for entries? Andy, please post this, the training in the Signal group. Yeah, no problem. And what do you mean post this? You mean post a link to this or the analysis of this? Okay, so what I'll do now is I'll go through exit points. Okay, so exit points is probably the most important thing in terms of you don't want to hold on for something too long because it's going to come back to entry and it's going to go back down to stop loss. Okay, so this is where, again, market structure comes into play. If you're entering a buy in a bullish trend, you want to make sure that you haven't exhausted that bullish trend. But what I mean by exhausting is you get a reversal indication at the top, right? Because once you have a reversal indication at the top, that means you are coming back down. Just like we teach in the course, is that there's a 90-degree triangle, right? And this triangle always comes back to this level where it started. Okay, so your exit points in theory should be, if you're at the top of a bullish trend and you get an exhaustion, right? If you reach an all-time high, for example, on NASDAQ, if you reach an all-time high, you will see that it's failing to make a higher high, right? And normally it will give you more than one chance. So it will fail to make a higher high, continue to make a higher low, and then make a lower low or an equivalent high, right? And this is where you can have an extra strategy in terms of, I've entered my buy. I can see price is rejecting. So ultimately now it is the time to exit, right? But there's a difference in terms of rejection when it comes to market structure. So I like to use higher highs and higher lows. If we fail to make a higher high, I close my trade. Okay, and it's as simple as that. It doesn't matter if it's a small little bounce or it's, you know, it's insignificant. But for me, if we fail to make this higher high, right, and if we close here and then come back down, for me, I close the trade straight away because we have not broken our previous level. So this is where if I entered here and we failed to make a higher high, I would exit the trade. Okay, so it's just about, you have to identify structure. And if you can see where price is breaking structure, that should be the first indication to exit the trade. Okay, and it's, for me, the strongest confirmations I have is a higher high or lower lows and a higher low. Okay, and this is where it comes with waiting to see. And if you're in a buy or a sell, right, and you can see price is rejecting this area, you know, 20 times. So you can see prices approach it 3 or 4 times, right? We should be, again, we should be expecting price not to break it unless we see that it's physically going to break it. So if you can see rejection candles in the form of a wick or in form of a doji, right? This is where you should ultimately be looking to exit the trade. Okay, and I promise you, it's better to exit with some profits than to hold it and be cocky and say, nah, we're going to break through, right? But if you have a rejection, ultimately that would be another indication for another trader to enter the opposite of what you're doing. So that's a way to think of it. So if you've got a hammer or something at a resistance, and then you've got a bullish engulfing, right? Your exit point should be at this resistance level. You shouldn't aim for too high, because if this is a key level, the chances of you breaking above are very slim. But again, if you can see that you are breaking above, then go for it. But this would be a good exit level, is using your levels not only to find your entries, but your exits. Okay, and you should use these as your take profit levels as well, in terms of, if I'm entering a buy here, I'm not going to put my take profit all the way to somewhere random. I'm putting my take profit in a place where I know there is resistance or support. Okay, I hope that answers your question. What time frame is advisable for entry? So for me, I use a 4 hour, 1 hour, and 30 minutes when I'm trying to find really good entries. So like I said, on a 4 hour, it will be one candle, right? So you can see on a 4 hour, we have a bullish candle here. But if you go to a 1 hour, it will be multiple candles. So again, you've got a significant level. You've got, 3 bullish flags or 3 bullish candles. And if you continue going lower, it's just going to be more bullish candles, right? So this is where less is more. So if you can see a bullish candle on a 4 hour, that should ultimately be your indication to go for something. But then again, on a 4 hour, it's bullish, right? But like I said, on a 30 minutes, it's multiple candles. So it's just about looking for a rejection. So again, you can see there's a nice rejection pin bar right over here. Okay, but it's combining this pin bar with this level of support. Okay, it's not just using the pin bar alone. Another note for you guys is I like to only say that rejection candles are only valid when they are near a support or a resistance. You can get a doji in the middle of an uptrend and it means absolutely nothing, but people will take it as a rejection. So you can see we've got a pin bar here to the downside, and people will take this, oh yeah, this is going to happen. Yeah, we've got a doji, but at the same time, it's not near support or resistance, so it means absolutely nothing. Okay, so if you want to make a note that a rejection candle is only valid near support or resistance. So again, on this side here, we can see multiple candlestick rejections, and then we're followed by 3 bullish candles. So this is what I like to call the 3 soldiers. So again, you've got 1 candle, 2 candle, a bullish candle, right? So you could enter on the break of this previous high of this week, which would then give you a good entry. Buy, limit, and sell examples, please. Which do you prefer? So I don't necessarily just prefer one, but there's different times to use them. So a lot of people ask, how do you balance studying or university or school or something? So this is where you go and you find these structures. So you find your resistance level, your support level, and then you put a buy, either a buy limit or a sell limit. So this would be for if you want to put a sell limit here, then obviously you're expecting price to go back down. And then the same thing, if you put a buy limit here, you're expecting price to go back up. Okay, I do not, 9 out of 10 times, I don't use a buy stop or a sell stop. Sometimes if you have I don't know, if you can see price is approaching a level of structure, as in terms of a support or resistance, and it's very, very strong, you would put a buy limit above, right? So that when it breaks, it triggers you, not when there's wicks coming through. So you put it above a level of resistance, or that now becomes support, and then that will trigger you into then into the trade. So I very rarely use buy stops or sell stops, but technically they're always near a level of support or resistance in my eyes. Okay, do you have any other questions? To answer your question, advisable for entries, you need to find for you that gives you confidence in your own trade. So for me, I use a combination of 1 hour, 4 hour, and 30 minutes. It just depends what you want to see for yourself, because again, trading is like a relationship. You have to build trust, and once you build that trust in your setups, in your trades, you will see things start going smoothly. Okay, so it's just about, again, your trading plan has to be conformed to you. Another person just asked me quickly if I can make a example on a trading plan. So I do have an example here. Sorry, my notepad here quickly. Okay, so these are some rules. They're not all my rules. You guys can conform as to how you want to, but it's literally just about what works for you, because what works for me, it might not necessarily work for you or anything. Okay, so rules for the market: play it smart, look for confirmations, don't try advanced things, don't try silly things, don't try overcomplicate something, right? Secondly, for me, is don't become greedy. You gotta, if you're happy with your money, take it. Don't say this is 60, it can easily be 100. No, don't be greedy. If you reach a daily target, or if you reach a level where you are happy, take it, right? Stick to the basics and use what you have learned. This is what I've been saying the whole lesson, is stick to basics, right? There's no point in learning all of this and it works 4 times, and then the fifth time it doesn't work, so you throw it out the window and you go learn a new one. That's one of the most important things that people are doing, is they'll find a strategy, they'll test it 1, 2, 3, 4, it will work 4 times, fail once, throw it away, get a new one, right? There is no such thing as a perfect strategy. It is all about a good strategy, okay? And it's conforming it to how it would work for you. Okay, then number 4, there is no such thing as hope. Again, like I say, you trade what you see, not what you feel. Okay, if you see prices reversing, exit the trade. If you see price is respecting a structure, enter the trade. There's no such thing as I've entered a buy now, we're going down, I'm negative, I hope it's going to go back up. No, you see if it's going to go back up, I promise you. So for me personally, 3 losses and I'm out. So if I'm in a day and I take 3 losses, I sit out for the day, I watch the market, I trade on a demo. Then learn from mistakes and don't give up. So this is where it comes with, it's worked 4 times, it's failed the fifth, why give up? You've won more than you've lost, but you're giving up the war already. Okay, so just stick to what you have learned and what you believe in. Don't try change anything. Don't try throw it away and learn a new one. Build on what you have already learned. Okay, so there might be something that hasn't worked for you, but you haven't studied maybe bullish engulfing or candlestick rejections. Then once you incorporate it with what you already know, then boom, you'll see pieces start going together, right? Remember, losses are a part of Forex. I do not know a single successful trader that has 100% accuracy with signals. If they do, they are lying to you and they're lying to themselves. It's straightforward. There's a trader that's taken a loss in his life. There's a signal that hasn't gone out the way it's supposed to be. There's a setup that's failed, right? There's no one that moves the market. There's no one that knows where it's going to go. It's all about probability and using previous history to make educated guesses. Okay, don't let your emotions affect the way you trade. This is a quote from me: the market isn't going anywhere. Okay, if you are, for me, if I wake up in the morning and I'm feeling sad, if I'm feeling down, if I'm feeling negative, like I give off a negative vibe, I don't trade, because then I know you attract what you are. So if I'm negative, I'm going to attract negativity, right? And then the same thing, if I wake up extremely happy, if I wake up, over the moon with myself, I'll learn to control that emotion in terms of money, because when you're happy, you become greedy. So if you are happily in profit, at 200-300, you become greedy. So therefore it also affects your trading, right? So again, winning and losing affect you the same way. Okay, there is a time and a place for trading. The trading market is open 24/5, 24 hours a day, 5 days a week. I promise you, you miss an opportunity today, tomorrow there's a new one. You miss an opportunity now, there's another one in 2 hours. Okay, there is a time and place for trading. So just like there's a time and a place for sleeping, there's a time and a place for trading. Like I said, it all depends on the energy around you. If you're not feeling lacquer, you're not feeling, yourself, don't trade, because ultimately it's going to affect you. Then A win is better than a loss. Those small amounts add up. A lot of people aim for doubling an account in one trade. They aim for driving a Lamborghini next week by winning back 100 times what they put in, instead of, if I can make, I promise you right now, if when I started trading, somebody told me this, if I can make $10 every day trading, right? That is enough for me to keep the craving away. Because if you think of it, 10 times 5, that's $50 a week. 50 times 4 weeks is 200. So you've got $200 from doing nothing. And then over time, that 10 will change into 20, then you'll have a 22, then a 23, then a 12, then a -5, and then a positive 20, positive 15. All of those add up, right? And at the end of the day, it is long-term growth. It's literally not about doubling your account in one trade. It's not about thinking of what color Ferrari you're going to buy next week. It is all about the small ones add up. Okay. Then number 11, the market does not owe you anything. It owes you absolutely nothing. Okay, if you lose a trade, it doesn't owe you that money back. If you win a trade, you don't owe that money back to the market. It is all about your emotions. So like I said, the market doesn't owe you anything. If you take a loss, you are going to trade a revenge trade, and therefore you are going to go against yourself. Okay. The market does not owe you anything. Remember that, right? I want you guys, this engraved in your guys' head, that if I've taken a loss now, it does not mean I am guaranteed to get my loss back. Then, quality over quantity. Again, very, very important. You got to think of it as friends around you, right? You can have 100 friends, but they treat you like crap, right? And then you can have 2 good friends, but they quality, they mean a lot to you, they look out for you and that kind of thing. And then you compare them, watching them from a side. So you see the guy with 100 friends and you see the guy with 2 friends, right? You can see the difference in their attitude alone just by the people around them. And if you can take 4 trades and all 4 of them win, compared to taking 10 trades and only 4 win, the obvious choice is to only take 4, right? Because ultimately you don't want to trade for the sake of trading. You want to trade to make money. And that's very, very, very important. Then my favorite rule is trading is 80% waiting, 10% buying, 10% selling. If you can learn to sit on your hands, right, and you can wait for a setup to come to you, I promise you, your trading will change. It's the same thing if you picture yourself fishing, right? If you're fishing, you put the hook with the bait in the water and you wait for the fish to come to you. You don't jump in the water and try to catch a fish. You're not going to do it. Okay, so that's a way to think of it. I know it's a bad example, but think of it as fishing. You got a hook, you put in the water, you wait for the fish to come to you. It's the same thing with trading. You wait for the setup, you wait for price, you wait for the structure to come to you. You don't go out looking for trades, you let the trades find you, right? So this is where it comes with, I'm going to wait for price to reach this level before I look at buying. I'm going to wait for price to reject before I sell. I'm going to wait for price to show me what it's doing before I enter. Okay, it's just about reading in between the lines, and it's about waiting. I'll promise you patience, patience, patience. Patience, it goes hand in hand with trading, right? And trading is the only way you can make money from waiting. Think of it that way. If you can wait, you can make money. I promise you. I know it sounds simple, but I promise you. Right? And then lastly, wait for price to come to areas of interest. Again, the key word is wait. Okay, and this conforms with wait for price to come to support, wait for price to come to resistance. You don't want to preempt the sell here, right? Because you preempt the sell here, you enter your sell, you put your stop loss just below structure, and it's taking you out and it wide, right? So it's just about waiting. I promise you, wait, 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 wait. Okay. So those are just a few examples of some of mine. These are not all of them. This was just a quick example I got for you guys. So this has to be conformed to how you want to operate as a trader. This is how you want to operate in terms of your rules. Okay, so these are your rules of trading. I'm going to look for confirmations before I trade. I'm not going to become greedy. I make my daily target. I'm out. Stick to the basics. I'm not going to go learn a new strategy overnight. Again, there's no such thing as hope. If I'm in a trade and I'm hoping for it to reverse, it's the wrong thing. 3 losses in a row and I'm out. It's the same. It's about discipline. You're not going to continue burning yourself if it's hurting you, right? So it's like touching an iron. You're not going to continue touching an iron that's just been finished ironing your clothes. Learn from mistakes. If you enter a trade and it hit stop loss, go back and review where you went wrong. 9 out of 10 times you'll say, I missed this. I missed that, right? And then losses are a part of Forex. This is very important for psychologically building you up as a trader. You're not going to win all of your trades, but it's about maximizing your profits from the ones that do win and minimizing your losses from the ones that do hit stop loss. Don't let your emotions affect the way you trade. Same thing. It's all about emotion, guys. So you can see in these rules here, there's a lot of psychological aspect of trading, and then there's a lot of patience when it comes to trading. Okay. Do you guys have any questions for me? Any other questions? Number 30 on the list was a joke somebody just put in. It's something about quality time with your mentor kind of thing. So before I taught at FX Code, I taught other students as well. So this was one of his things that he drew up and sent to me. Number 13 is not important. Okay, so another thing to remember, this can have as few or as many rules as you want. There's no limit, there's no nothing, but you have to learn how to follow this. Okay. All right. Can you please cover stop loss? Joe, by stop loss, what do you mean by stop loss? Where to put it, how to use it, what? Okay, so for me, I always put stop loss away from structure. Either if I'm buying, I put it below the support, or if I'm selling, I put it above the resistance. So this is where it comes with finding your zones accurately in terms of you could have your zone out by a couple of centimeters or millimeters, but it won't be in the right place. So for me, I always put stop loss below structure. I put stop loss, if I can explain this way, I put stop loss in a place where if it hits stop loss, I'm looking for the opposite direction of what I'm doing. Okay, so if I put a buy and it hits stop loss, then that automatically in my head says, okay, there's now change. I should be looking for sells. So that's how I like to think of it in terms of where to put a stop loss. So you want to put a stop loss where your setup becomes invalid. Okay, so for example here, so you can see we've got a low, then we've got a higher high and a higher low. So if I had to enter on this, right? So we don't know that it's made a continue with the bullish trend. So if this had to break below this previous length of structure here, I should be looking for sales, but at the same time, my stop loss shouldn't be that big. My stop loss again would be just below structure based on previous price. In terms of my stop loss would be just below this area. So sometimes you get unfortunate where you get wicked out, but at the same time, you got to give yourself room to breathe. So normally if I'm trading currency pairs, it's 20 to 25 pips below structure. And then with gold, it's a couple of dollars, maybe $6 or $7. I hope that answered your question. So just you got to identify your structure and then put it just below or above your level of support or resistance. And then if you don't have a level of support and resistance and you have, let's say, a bullish flag, right? I'll just draw a bullish flag. Right, so we have our bullish flag here nicely. You would put your stop loss. Obviously, you would enter on the break, right? And then you would put your stop loss just below this line here. So if you enter on the break, you're not targeting too high. So a lot of people put their stop loss here. It's totally up to you. You can if you want to, but I like to put it, halfway between the supporting trend line and the resisting, just so that if the market comes back to retest, I don't get caught out. So if this channel here, if you cut this channel in half, in terms of where price has been, you can obviously find your entry point, which is the break, and then your stop loss would be just below.
Hello, Andy.
Why don't you have trend line? I do have a trend line. Again, it just depends on the. Okay, so this is NASDAQ. So if I go to gold, you can see I do use trend lines here.
Hello, Andy.
What time frame do you use for analysis and what time frame? So I prefer to do my analysis on a higher time frame, either a 4 hour. So that could give me the overall direction of what I should be looking for. And then I'll jump down to 1 hour to do my minor levels. So levels of insignificance, not as significant as the other ones. And then entry, I don't enter on 15 minutes. For me, your chart is just too full. You don't see what actually going on. So for me, the lowest I go is 30 minutes and I analyze on either start on a daily and then work my way down. So 4 hour, 1 hour, and then 30 minutes or 1 hour is where I find my entries. So yeah, we can see price is broken a trend line, but again, so this isn't the previous one I just did. So again, it's just about waiting to see what's going to happen.
Hello, Andy.
Okay, is there any other questions?
Can you hear me, Andy?
So again, guys, you need to remember the basics in terms of market structure. Oh, sorry. Hello.
Yeah, it's Lucas here.
How's it? How's it?
All right, man. My quick question is this: is it advisable to follow only few or to trade only few pairs? Two or three pairs, or it's fine just to trade anything only with the strategy that we are given?
So for me, when I first started off, I stuck to 3 or 4 pairs, right? And then once I understood the relationship between these 3 or 4 pairs, I moved on to others. So I didn't just go to random ones. So for example, if I traded GBP USD, I would then go to GBP JPY because I've still got GBP. So now I would look how it reacts with GBP JPY. So stick with 2 or 3, right? Or whatever you can handle. And then start expanding once you can understand the relationship. Some pairs are harder to analyze. Like, for example, Euro CAD, it doesn't like to follow trends. It doesn't like to conform to anything. So you'll just see, if you stick to majors, which if you look on your MT4, you'll find majors. Stick to majors and you'll see everything will start coming to light. It's really good to trade just majors.
Thank you, Andy.
No problem. Again, any other questions? My microphone is on now. Okay, so this will be posted again if you guys want to go watch it. But so it is in the teachable course. I literally just did another practical for you guys. It is all there. There's no secrets to anything. I hope I helped you guys a little bit understand it a bit better. Because at the end of the day, that's what I'm here to do. And then I will do another session with you guys on Sunday. So yeah, any other questions, guys? Nope. All right. Well, you guys are free to leave if you want. If you want to stay behind and just ask anything without anyone here, let me know. Either or, I'm okay with it. Thank you guys for coming.
Thank you, Andy.
You're welcome. You're welcome. I'm on gold and already profitable. No worries. You're welcome. You're welcome. You too, guys. You too. But tell me, I noticed your trend line. You don't have 2 touches thingy or 3 touches thingy. Guess hence I get it wrong most of the time because I look for those. Yeah. So don't get me wrong. For me to confirm trend line, I'm looking for more than 2 or 3 touches. So at the same time, if you in a current trend where you don't see a 3rd touch, you have to anticipate where that third touch is, right? Because we're looking at the market as it's printing. So it's just about, you have to predict where you would expect that third touch to be. So it's not that I don't use it. I'll always look for a third touch before I enter something. You're welcome, guys. You're welcome. The more touches, the better. I hope that changes your perspective. Okay, so if you got a trend line, if you got more touches on the trend line, good for you. You're welcome, guys. Jose, yes, there'll be a recording. I'll post it on YouTube and then I'll post the link everywhere again. So don't worry. You're welcome. Any questions before anyone goes?
Hello, Andy.
Hello.
Um, the reason I was asking, if you don't mind, can I like show you my chart and then you can, if you don't mind, review like the mistakes I make and stuff.
Yeah, I can do. So the easiest way for that would be to, is if you do you use MT4 or TradingView?
Currently I'm on my PC,
Okay.
but then I use MT5.
MT5, okay. And where do you do analysis? On your phone or on your computer?
I do on my computer, but then I have some on my phone since I'm not
Okay.
always on the computer.
Yeah, okay. Let me just see if I can give you power to share your screen. Okay, yeah, it's not allowing me because there's more than one person. So let me just see. Yeah, I can't do it right now. But if you send me a picture or a screenshot on either Discord, Signal, WhatsApp, anything, I'll come back to you. I always reply to you guys. Don't worry.
So I can inbox you
Yeah.
on Signal.
Yeah, just message me on Signal, send me a screenshot or a link or something, and then I'll go from there.
Okay, thank you.
No worries. Trust, what's your major confirmations or rejections candlestick pattern? So for me, my major confirmations is my trend line, my support area, a bullish engulfing, a doji, a gravestone. So for me, I look for the more confirmations, the better. So if we have a supporting trend line on a support, that's 2 confirmations. 3 would be we're in a bullish trend, that's another confirmation. And then 4 would come from your candlesticks. So for me, I use structure and I use candlestick formations as well. You're welcome. There's VIP. It's in the pipeline at the moment. We want to give signals to those, but also we don't want to give signals because then people will just rely on that alone. So it's something we are thinking about, but we don't want to stunt your guys' growth, because giving somebody signals is the easiest way to stunt their growth because then they rely on others. Mhm.
Okay.
Okay, any more questions? If that's all, I'm going to end the session here, guys. Yes, sir. Let him first. What time frame do you mark up a chart? Either the daily or 4-hour. So I'll start on a daily to find my major trends, and then I'll go back to either 4-hour, and then I finish my analysis day. VIP mentorship is the one on Discord. So it is, you're in it, so you don't have to worry, but it's the one in Discord. So this is the mentorship. Entry 1 hour 30 minutes between the two. Okay, guys, there'll be another session on Sunday at roughly 6 p.m. for you guys. So 5 o'clock for me. Yeah, I'll post the link again before as well. So far, if daily H4 and H1 don't match up, I don't enter trades. Again, it has to conform to your standards of what you're looking for from the trade. Sometimes it doesn't always line up, but at the same time, the higher the time frame, the stronger the meaning, right? So if you have a bullish engulfing on a daily, it means you're going to have a stronger confirmation on a 4 hour or 1 hour. Why don't you use 15-minute or 5 minutes? For me, 15-minute, there's too much going on. You can't see the bigger picture. Right. So you can see how many bullish engulfings we have here, but on a 1 hour, it's literally just consolidating. Okay, so it's just about you need to also you can enter on a 15-minute, but I like to have the bigger picture. So for me, 1 hour, I can see what's happening. I can see if we are at a level of support. For example, on a 15-minute, you're just looking at the past 20 minutes trades, you know. Okay, thank you. Yes, guys, you guys are feel free to inbox me, right? I'll get back to everyone. I'll try to answer as many questions as I can. So yeah, I'm here for you guys, so you might as well use me, né? So don't worry. I'm here for you guys. You're welcome. You're welcome. Thanks, guys. But yeah, I hope you guys had a good session. Enjoy your weekend. Trust, I did that in the beginning of the video. If you watch the link, you can see where I go and analyze gold. Okay, just a quick breakdown. Okay, so I'm gonna pick a pair I haven't done, but a pair that I trade. So for example, Euro AUD, again, you see on a 15-minute, it just looks like a whole bunch of things. So if I go to 4 hour, I'm just gonna. Okay, so again, I wanna. So you can see my analysis here is on a 4 hour. So I don't go far back in time. I go back to where current price is. So when I was analyzing this, we were still in this channel. And so if I start on a daily, and so daily will give me my direction in my head that I'm looking for. So if we're on a bullish trend, I'll automatically be looking for buys, but I'd wait for confirmations on that. So again, yeah, I bought this today. I shared this in the currency group as well. I said there's a good opportunity to buy Euro AUD, and it was sent. So again, it's just about looking at the bigger picture for me. On a 15-minute, there is no real, you can't see everything, right? Everything just looks so squished. So if you want to see me analyze the chart fully, again, it will be in the recording of this video so you can see from start to finish. I think my dinner is burning, so I need to make this quick. What pairs do you trade? I trade a lot of pairs. Obviously, I'm a bit more, I want to say, advanced than a student because I can trade more pairs. Again, it's totally up to you. So these are my 19 pairs that I trade, and I'll narrow them down during the week. So you can see this week was 12. So from the 19, I only looked at 12, and my red list is what I normally trade within a month. Please don't. Yeah. Well, I can. It smells nice. So I don't think it's burning yet. So don't worry. So yeah, it's just you guys need to stick to 3 or 4, 5 max pairs that you can learn to understand before you go to anything advanced. Okay. All right, guys. Thank you for attending the lesson. I hope it was helpful to you all. I'll be posting a link. Do it. Yes, I do. I journal all my trades, whether it's a screenshot or I write it down. I journal everything. Quickly. Any more questions? You're welcome, guys. All right. Well, have a good evening. Have a good weekend, guys. Remember to do your homework analysis on a weekend. And I'll see you guys again on Sunday for the outlook of the week.